Welcome to Oil and Gas Investor Headlines for the week ending in July 1st. I'm Heather Rosenbaum. Before we get started, I want to take a moment to thank our sponsor, Navport. For more information on their upstream data solutions, visit navport.com. First up, the UK's decision to cut ties with the European Union earlier this week rattled investors and sent oil prices tumbling, which have now calmed down. But what does Brexit mean in the long term? Economists and analysts are divided over how the devaluation of the British pound and destabilized markets in Europe will affect oil supplies, demand, and prices. They also discuss what the impact the United Kingdom's decision to withdraw from the EU could have on oil and gas operations. Energy Transfer Equity officially killed its merger with Williams Companies, and now it's up to the courts. The deal was announced in September of last year. It was valued at $38 billion and could have created a 100,000-mile network of pipelines. The deal unraveled over concerns that Williams' assets would have tax implications for Energy Transfer. Williams says it will look to recover monetary damages from Energy Transfer for failing to close the deal. And EOG Resources and hybrids? EOG is driving ahead, but its new vehicle isn't electric. It's a new hybrid play that goes beyond the shale. Bill Thomas, CEO of EOG, perhaps the premier operator in the Eagle Ford, said the company is working with a new geological concept. EOG is set to increase its 20 years of drilling inventory following the company's discovery of a play with wells that are, quote, easier than the Eagle Ford. Thanks for watching this week's Oil and Gas Investor Headlines. For more on these stories and others, head on over to oilandgasinvestor.com. See you next week. To stay up to date on the most recent hard energy videos, subscribe to our YouTube channel by clicking here.